And now it's time for development debates. We dig deeper into some of the questions shaping the future and present of China. Today, we'll see two experts debate if India will replace China as the new factory for the world. Walk into any Walmart and you won't be surprised to see shelves filled with Chinese-made goods. Everything from shoes and garments to toys and electronics. After 30 years of double-digit economic growth, China's earned itself the nickname of the world's factory. In the meantime, India's economy took some major swings. It saw super fast growth, but then that growth saw a sudden change downwards. India's golden period of economic development started at the beginning of the 21st century. Even during the 2008 global financial crisis, India sustained an annual economic growth rate at around 9%. Since the year 2011, India's economy has seen a downward trend. It downgraded to less than 5% for 2 consecutive years. However, the election of Narendra Modi has brought hope to some experts who want to see those trends go back up. It's being said that he prioritized economic growth in his election campaign. He even promised to make India's economy soar. Now people are asking how far that growth will go, and if India will overtake China as the new world's factory. Experts from all over the world are divided sharply on this issue. Zhang Tianbing is the chief writer for China Business News. He thinks it's not impossible for India to catch up or even surpass China. He said that India's GDP per head was the same as China's 3 decades ago. India boasts an abundance of laborers and cheap land. In the meantime, the country is still in need of infrastructure and foreign direct investment. The need to develop the financial market in India is strong, and all these points can provide India with a lot of opportunity and potential for fast growth. He also said the demographic structure offers India a lot of competitive advantages. According to Zhang, since India has a large number of young people, its labor force could grow by about 40% in the next 40 years. In contrast, China's population is seeing a boom in the number of elderly people, and that means a lagging labor force is just around the corner. Zhang also said that Modi's economic plan bears resemblance to the early reforms used in China's Guangdong province. He says successful reforms and development could become examples for people from other parts of India. Since there's no compulsory rural land requisition policy in India, people in the countryside would benefit more from national industrialization. Zhang said that if one looks back, the government's always at the heart of India's failure. India is an extraordinarily hard place to govern, and much power is devolved to the states. This time, Mr. Modi has won with an outright majority. The combination of parliamentary clout and personal power means that Mr. Modi had a better chance of getting state governments to go along with him than Mr. Singh did. Arvind Subramanian, on the other hand, has doubts about India's economic future. He's a senior fellow jointly at the Peterson Institute for International Economics in the Center for Global Development in Washington, D.C. He published an article online illustrating his thoughts and concerns. Although Arvind recognized India's long-term economic achievements, he still questions the political structure in the country. The researcher said that Indian politics is getting progressively criminalized. Corruption is endemic. While India's high growth rate should have led to low debts, fiscal populism has ensured that India's public finances are almost as unstable as those in high-debt industrialized countries. But why has India grown relatively quickly over the past couple of years? Arvind said that the conventional explanations focus on elite education and dynamic information technology. But these sectors are too small in size and too narrow in benefits to sustain rapid economic growth in such a large country. According to Arvind, for most measures of market friendliness, India lags behind Latin America and even sub-Saharan Africa. It's still more closed off to trade and foreign capital than most other countries, and it's still hampered by extensive controls on economic activity. Also, it's still dominated by a large public sector. In short, it's growing at an annual rate of less than 5%, not 7.5% like China is. The debate presented today showed there are signs that the growth will still continue at a relatively fast pace in India, but there are major concerns raised about India's ability to take over China's position as the world's factory. There is very little brought out about other factors, like if other countries besides India will be able to benefit from rising wages and costs in China, and also the possibility of political ties affecting this growth.